Welcome to our YouTube channel, Moneyline with Nancy TV. This is where you get the latest updates on business, finance, economy, market, as well as investment information. If you couldn't follow us live on television, please do subscribe to our YouTube channel. Also, press the notification bell so that you can get notifications. Thank you. Enjoy this video. Let's get started. The December inflation numbers that came up yesterday, what's your first reaction to it? 34.8% for inflation numbers.
So my first reaction is, as you have laid the background, you have succinctly put it that inflation, the last time Nigeria saw inflation in the 20s numbers, 20 percentage numbers, was back in January, early in the year. And inflation has progressively increased to 34.8% today. Meanwhile, the central bank, which is in charge of monetary policy in Nigeria, has also progressively been increasing the monetary policy rate in a bid to control inflation. So my first thought is that perhaps the medicine that is being applied by the central bank is not working because inflation is not showing any response at all to that therapy that the central bank is given. And so we need to look elsewhere. And that elsewhere is fiscal policy to see how they can also come to the table in this fight against inflation.
Why do you think that Nigeria's inflation continues to be so stubborn, as it were? It continues to be so stubborn, and all the efforts from the monetary policy side seems not to be reducing it.
So what I can point my finger at, I think there are a lot of reasons for why Nigeria's inflation is difficult. And I mean, let's understand it. Inflation is always difficult to fight, right? But Nigeria's is more particularly difficult, and I can point my finger at one thing, and that is the disconnect between monetary policy and fiscal policy. And that disconnect is not helping the fight in the inflation. So we have a minister for finance and the coordinating minister for the economy. And that's a really good thing for President Tinubu to have thought about putting someone in charge to coordinate both monetary policy and fiscal policy. And I mean, I can also give credence to the fact that the minister is doing the best he can, but possibly he needs to do more. And these are the areas where we need to do more. Number one, the central bank believes that the economy is awash with liquidity, and therefore they are hiking interest rates to attract people to come and save money in the bank so that they will not consume as a bid to fight inflation. But the fiscal authorities, and when we mean fiscal policy for the benefit of our viewers who may not understand these technical terms, is the management of government revenue and expenditure. So that's where we'll talk about taxation. That's where we'll talk about a budget, revenue, expenditure, and things like that. And then we'll talk about committing budget to boost economic activities. That's fiscal policy. Now, whereas the central bank, which is the monetary policy authority, is on a tightening, meaning mopping up money from the economy so that they will fight inflation, the fiscal authority are on an expansionary journey, increasing money into the economy. For instance, before the advent of this government, the Federal Allocations Accounts and Allocations Committee, FAC, they used to distribute about $500-600 billion to the three tiers of government.
That you mean naira?
Today,
you mean naira? You mean?
I mean,
yes.
sorry, I wish it was dollar,
dollars.
But it's actually naira.
Yes.
Yeah, exactly. They used to distribute about 500-600 billion naira to the federal, states, and local governments. Today, that is about 1-point-something trillion. I think it got to about 1.4 trillion. So, Nancy, just look at the disconnect here. The central bank is mopping up money from the economy, the fiscal authorities are now pumping more money into that same economy, right? And then the fiscal authorities are taking loans. When you take a loan, it means money is injected into the economy. Because when you take a loan, whoever is giving you the loan will credit your account and say, go ahead and spend. So you now see that fiscal authority is expanding, monetary authority is contracting. How does that work? And that is an area that needs to be coordinated better. What is the real economic agenda? Are we going on a contracting or an expansion? Because both monetary policy and fiscal policy are like the two lungs of the same chest, and they both have to be breathing in together and breathing out together. If one is breathing in whilst the other is breathing out, well, it's a case of cardiac arrest that we are seeing. So I think that is one area that we need to figure out what is it exactly that we want.
Now, where does the trade-off come from? Because I understand what you're saying. The monetary policy is trying to mop up funds, while the fiscal policy on its own would also say we want to boost the economy. Of course, states also have to have money to be able to do what they need to do to pay salaries and also to build infrastructure and what have you. So they also need those monies. We cannot say that they should not distribute monies to both states as well as local governments, including the federal government. The central bank governor has also come up to say, Olayemi Cardoso, in one of the MPC meetings, I think in September of last year, when he mentioned that any time that FAC shares money, we will see the Naira depreciate further. What that means is that they will collect our Naira, they will go and change it to dollars, wherever they are, but they know themselves, and it depreciates at the Naira. So where does the trade-off come from, or how do we balance it for the need of fiscal policy to do what it has to do fiscally, while the monetary policy has also what to do in terms of price stability?
So thank you very much for that background you have laid. Absolutely, and you are absolutely correct. So two things. The first thing is this. And Nancy, before the advent of this government, like I said, FAC was in the neighborhood of 500 to 600 billion naira. Where is FAC seeing 1.4 trillion now? The answer is from the dollar, from the sale of the dollar. Because in the last government, if the government made $1 revenue, they sold that dollar for 460. It was 460 official rate as at 29th of May 2023, right? Today, if the government makes $1, they will sell the dollar for 1,500 or 1,600. And they now push all that money into the federation account. And then the money goes out into the economy only for the people who are collecting this money to take it back and go and buy the dollar. And what you then see is that inflation is not just it's just there in the economy. So two things that need to happen. Number one, we need to ask ourselves, the inflation that Nigeria is battling, what type of inflation is this? Because inflation is like an ailment. Before the doctor applies ailment, he needs to understand what is it that is dealing with you. So what type of inflation is this? No, we have two main categories of inflation. We have an inflation that is called demand pull inflation. That is where people have a lot of money and they are chasing goods and services. And of course, because demand is higher than supply, the prices will start going up. But then there's the other inflation, which is called cost push inflation. This is supply side inflation. Because in the basic rules, laws of economics, price goes up if demand is more than supply. But also price goes up if supply is less than demand, you know? So the Nigeria inflation, for me, as I see it, is a supply side inflation. And even the Monetary Policy Committee members, if you read their personal statements, they describe cost push inflation as the main driver of inflation in Nigeria. And yet we are applying the solution for demand pull inflation, which is interest rate hike.
Okay.
So interest rate hike will not work
Yeah.
in a cost push inflationary environment.
That brings me to my next question. When you talked about interest rate hike, Olayemi Cardoso and the members of his team, the MPC, have postponed the January MPC meeting now to February. We will be having the first MPC meeting of this year in February. How do we now rethink the relationship between inflation and interest rates? Because I assume that when even Olayemi Cardoso and his team comes up in February, they may actually also increase NPR, because we've seen as NPR ended at 27.25% in 2024. That's one. So how do we rethink the relationship between interest rates and inflation? And also we should take note that what we are even suffering in Nigeria is stagflation as it is. Let's forget what the MBS has told us, that unemployment is 4.3%. We know that Nigerians are miserable. The misery index in Nigeria is still very much high. So that's one question. The second question is the dirty December influence. I don't know if you came back home for the festivities, if you're one of the diasporans that spent billions, billions of naira back home here. So the dirty December influence, the impact of dirty December, those spendings that perhaps pushed inflation higher.
Yeah, so you've raised a couple of things. So let's look at the relationship between interest rate and inflation. It is meant to be an inverse relationship, meaning as you are raising interest rates, you are expected to see inflation to come down. Because like I say, what happens is that when interest rate goes up, it means the banks are offering fantastic interest on savings. And so it's expected that those who have money should, instead of consuming, they would rather go and deposit the money in the bank so that they will get very good interest rate. But the relationship of interest rate and inflation in Nigeria has been, they are going in the same direction. So as the interest rates are rising, so inflation is rising. And that is because, like I said, Nigeria's inflation is cost push inflation, and therefore we not respond to interest rate hikes. Rather, interest rate hike becomes inflationary itself. Because when you hike interest, manufacturers of goods and services are now experiencing higher borrowing costs, and they are going to transfer those borrowing costs to the prices of the goods and services that they need to sell to consumers. What Nigeria needs to do is to deal with the basic issues. What are the drivers of inflation in Nigeria? Number one is food, because as we speak today, food inflation is in the neighborhood of 40%. Let Nigerian government, and these are the fiscal authorities coming to the table, let them go and drive away the bandits that have taken over the farmlands in Nigeria and return farmers to their farms and give these farmers equipment so that they can produce more food. The food inflation is not coming because we're demanding too much food. It's because there is just too little food that is being produced, right? Then you have another inflation that is coming from petroleum product cost, right? Today, as we speak, our 4 refineries, we still don't know what is happening to them. Government needs to take immediate action to transfer the refineries to private sector so that these refineries will bring 445,000 barrels refining capacity to the table. And let me tell you, Nancy, for so long as Dangote refinery remains a dominant monopoly, we're not going to get fair pricing. They must have to have competition. And the immediate competition they will get will be from the refineries. Then we are facing inflation from electricity tariffs. Electricity tariffs are very high, but electricity supply is still hovering between 3 to 5,000 megawatts. Nigeria is supplying 1 megawatt to 40 million people, whereas by global standard, it should be 1,000 megawatt. Sorry, I meant 1,000 megawatts. Nigeria is supplying 1,000 megawatts to 40 million people, whereas by global standards, it should be 1,000 megawatts to 1 million people.
Okay.
And South Africa is doing 1,000 megawatts to 1.1 million people. Brazil, with an equivalent population like ours, is doing 1,000 megawatts to 1.2 million people. So these are the areas that government really needs to come in. Why is a transmission company of Nigeria and the discos not being tackled? Why are the refineries not being tackled? Why are the farms not being tackled? Why are the steel plants not being tackled? Why are we not tackling railways? Today, you can only travel on a train from Nigeria's federal capital to only one state capital, that is Kaduna. What about the other 35 state capitals?
No, there are some also train routes now going on. I think, is it from, I saw somewhere in Kogi, I think to Warri. There's a train route there to Warri. Yes, I think that one is also operating. But I think I understand what you're saying. We should be able to connect other cities. That's across cities in Nigeria.
Exactly.
Okay.
So now let's go to dirty December. I know about all the stories about dirty December. Somebody was even raising a point that we should be taxing them and all that. And I say that was actually very myopic. because what countries do is to provide the enabling environment to attract tourists. When tourists come, they bring money and give you, right? Because before a tourist comes to your country, he's going to book a flight ticket. And that flight ticket, Nigeria has duty on that flight ticket that they will collect. Then they will come and once they arrive, they will consume transportation, they will consume hotels, they will consume food, they will buy stuff. Nigeria will carry a lot of things. Look, like in London where I am now, Nancy, is bitter cold, very bitter cold here. And Nigeria has the sunshine to sell to those who are experiencing winter. And they will imagine somebody puts $10,000 in their pocket. They arrive in Nigeria and they enjoy our sunshine, which of course we're not spending anything to produce. And then they leave their $10,000 for us and just carry their well-tanned bodies away. If we receive 10 million tourists every year, it's about $100 billion coming into Nigeria. What are we talking about? So instead of looking at dirty December as something negative, it's something we should actually encourage. Of course, it will impact on inflation because there's more demand.
Exactly.
But that is where we now need to supply more.
More.
We need to supply more things. We need to supply more food, more hotel rooms, more transportation, make things cheaper so that inflation will still be under control despite dirty December.
Okay, final question before I let you go. Inflation forecast was shifted downwards by Mr. President to 15%. We're closing out the year now at about 34%. I know that, of course, the average for last year will be in the band of 30%. How feasible do you think that this target by Mr. President is? Then secondly, do you think that the cash shortage that we're also experiencing, as it were, has, influences this? I've been thinking about it this morning, how cash shortage could influence perhaps inflation, or that could even lead to a bit of disinflation because the CBN wants to take cash away from the system. Is it also even deliberate by them? My next interview, I'll be looking at the cash scarcity in the country. That's my next interview. But what do you think about that and perhaps the relationship?
So your first question about Mr. President's target in his budget that inflation will come down to 15% in 2025. I am saying it's doable, it's feasible, but Mr. President must put in the hard work. This inflation is not just going to come down by magic, right? And let me give you a clue. Nancy, for the first time in this year, last year, 2024, inflation did come down, right? Inflation came down. June that is the headline inflation. In June, it was 34.19%. And in July, it was 33.4%. And then it came down to 32.15% in August. Why did that inflation come down? Because food inflation came down. Food inflation was 40.87% in June and 39.53% in July, and then 37.52% in August. So as food inflation was going down, headline inflation was going down. That is to show you a direct correlation between supply and inflation. So Mr. President needs to do the hard work to make sure that Nigeria has more supply. Why 3,000 to 5,000 megawatts? We should now be having a program to rise this thing to 10,000, 15, 20,000. The farms need to come back to life. The steel plants are dead. The refineries are dead. Mr. President, if he deals with those things, he can actually bring inflation down. And then talking about cash supply,
yes.
Yes, of course, a shortage of physical cash is there, but let's not forget that Nigerians are doing electronic banking now, more and more. There are some women now, you go and buy bullet from them, they will take transfer from you, right? Some of them even have a POS. So it's not going to impact so much on inflation because people are still consuming and finding other ways to pay. But Nancy, it's actually terrible to think that you go to a bank and you will not see cash in the ATM of the bank, but you will see cash in the hands of a POS operator that is sitting next to the bank. This was the kind of thing we used to have during fuel scarcity. You won't see fuel in the petrol station, but you will see fuel in a jerry can with someone next door. The central bank really needs to come very hard on this.
Okay.
Banks that are not putting cash in their ATMs, they are the ones giving cash to POS operators, and the central bank needs to rise up for Nigerians and deal with this matter.
I think the central bank has already fined 9 banks about 1.35 billion naira, if I'm not mistaken, 150 million naira each. But is that even enough? But let's see what that does. Thank you very much, Mr. Agule, for being on the show.
No, they do. Before you go, Nancy, I also want to, since we're talking about the central bank, I also want to ask the central bank that they should please wade into this telecoms USSD debt that the banks are owing the telecoms. The banks are taking the money from us, the consumers. It's not as if it's the money for the banks. So instead of saying Nigerians will not do without USSD service, which will put more hardship and inconvenience on us, the central bank should read the Riot Act to all the banks. They must pay the debt that they owe the telcos within a week or have their banking licenses suspended.
Okay. But Mr. Agule, you are not the central bank governor, though. But, it's okay.
I'm begging him. Yeah.
All right. Thank you very much for joining us.
Yeah, thank you
Thank
so
you
much,
very
Nancy.
much.
Yeah.
All right. I'll be speaking with Nick Agule. He's a chartered accountant, a public affairs analyst, and an energy expert. Thank you for watching. In case this is your first time watching us, thank you. Don't subscribe to the channel, drop your comments as well as like, and most of all, share our content.